This is the Hey Ed YouTube channel, and I am your host, moderator, and all-around nice guy, Edward Anderson. Okay, so I am not a financial advisor. Don't construe anything that I mentioned in this video as investment advice. Always do your own research before doing anything with your money. Okay, so I've been getting an awful lot of requests lately to do an update on the market, another market commentary. Because from time to time, I do make comments on the market. I don't really want that to be what my channel is about, but I do have a pretty solid trading background, including that as a trading instructor. And so sometimes I find myself compelled to make comments about what's going on in the market. And I'll just give you my opinion, and you can do what you want with them. Okay, so if you are a subscriber to my channel and you have been for a while, you haven't been surprised with what's been going on in the market, because I've been talking about this all along. As a matter of fact, way back in February, I did a video titled Panic. Okay, and I threw the chart up and I drew the important critical support level, and I told people what I expect them to do. And sure enough, that critical support level was broken, and now we're heading toward the next major support line. Okay, and if you have not subscribed to my channel, please do hit the subscribe button. And when you become a subscriber, if you click on the videos button here, you can see all of my past videos. And I cover many different topics, and I have a lot of very good special guests along the way too. We talk about some really important, meaty stuff. There's some really important topics covered on my channel, and hope that you take the time from time to time to watch my videos, because you will learn an awful lot. So, please go ahead and subscribe to my channel, and please give my video a like if you don't mind. And it also helps if you make a comment. All right. Okay, so let's start talking about the market here a little bit, because that's why you're here, right? Particularly what's going to happen with Bitcoin. I'm going to get to that in a second. But first, we need to talk about what's going on in the market, because all of your cryptos, particularly Bitcoin, they always accentuate the move in the general market. All right, so it's important to know what the market itself is doing. So let's take a look. Okay, so as you recall, back in February, I drew a very important line up here at the $34,000 level. It has taken out, and the market is doing exactly what I expected it to do. The next major support level comes in down around here at around the 26,000 level. By the way, this is the 2-year chart on the Dow Jones Industrial Average. And the next major support after that is really around 20,000. So for those of you who think that it cannot get there, let me remind you of this previous chart. Let's look at this guy again. All right, now see this previous 2-year run that we had here in the market? That was all a sugar high that was created by the Federal Reserve through artificially lowering rates and keeping rates low. We have a whole generation out there who've never seen high interest rates. When I bought my first house, my mortgage back in 1988 was at 19%. Okay, so yeah, okay, a little while ago, okay, but still, we have a whole generation here who have no idea what 19% interest rates will look like. Well, I think we could get back to those days, but there's not been too much time on that topic. All right, but this is all sugar high. So when people say, Ed, there's no way the market can go down to 20,000. Well, let me ask you why. Why couldn't that happen? I mean, please, someone tell me why the market has to rally anytime soon. What is it that you like so much? Do you like rising interest rates? Do you like inflation rate at a 40-year high? Do you like gas prices coming up at about over $5 per gallon now as a national average? And by the way, I think that we are going to be seeing gas rationing at some point. We're going to see a throwback to the mid-1970s. For those of you who are old enough to remember, we had to park our cars and wait. There are many places in the world where that's already happening. Why can't it happen here? Well, listen, our politicians are not doing you any favors. These people have an agenda. So can it happen? Yes, it can happen, and I think it's going to happen. So get ready, not just for high gas prices, but for rationing. All right, but let's get back to the chart. Okay, so again, on this chart, I do expect the market to make its way down to this $26,000 level. At the very least, probably a little bit lower, actually. Somewhere in here, I would hope that a bottom starts to get put in. But for that to happen, we need some actual catalyst for that to happen. But a lot of damage, a lot of technical damage has been done to this market. And this kind of damage is not recoverable real quickly. It takes time to recover from this kind of damage. What's going to happen is we're going to have the market come down, put in some kind of a low, and then chop around for a long time, put in some kind of a long-term base. Okay, so listen, in my opinion, for quite a long time here, this is going to be a trader's market, okay? Because there are going to be very impressive violent rallies along the way. I promise you that there's going to be. That's what happens in bear markets. But it's all emotional. It's all psychological. But the trend of this market is down. But if you're nimble and if you're a disciplined, talented, educated trader, you can make a lot of money in this market. But for most of us out there who don't have the time to trade or the skill set to trade, and you're just going to hold on to things, you're going to have a very rough year coming up. So what do you do? Okay, we'll talk about that after we talk about Bitcoin. Okay, let's take a look at Bitcoin, and let me tell you why I think it's going to get down to 14,000. Okay, so to save you time, I am not going to elaborate on a lot of different Bitcoin charts. Let's just get to the chase, okay? Let's get to what you really want to know. All right, now, when I was first giving the warning sign on Bitcoin, it was back here. We had a very clear double top, then we have nice head and shoulders. So right in here, I was telling people, all right, if this level gets taken out, we're going to see a lot of damage. And sure enough, boom. And we came down to this 19,000 level real fast. I mean, real fast. So now the next major support is right around the 12,000 level here. My guess is what's going to happen is it's going to bounce around a little bit here around the $20,000 level, and it might make a noble attempt at a rally. That could happen in here, okay, but it won't last. Okay, any kind of rally that we might get will not be it will be fleeting. If you're looking for a nice solid entry point in Bitcoin, I think it has to be certainly under the $19,000 level. I'm thinking right around 14,000, because right at this 12,000 level, that's where you have some real solid support. All right, I really don't think it's going to get below 12,000 very far. If it does go below 12,000, I think that will be short-lived. So I think anything under 12,000, you can feel comfortable, owning it. But I think you might even want to start nibbling right around, maybe 13,000-ish. Okay, but I do think that we're going to see 14,000 on this guy, and probably lower. So do what you want with that information. Bottom line is a lot of damage has been done with these guys, okay? And it's going to take time for them to recuperate. When you have that much damage is done, I mean, listen, markets don't have to go up. And there have been long periods of time in market history where the market didn't go up. It went sideways, even down for more than a decade. Okay, it has happened. And we could be setting up for that again. Okay, so when markets start to unravel, here is the succession. They always start with the most speculative categories and then work down toward the more conservative. All right, so we saw the cryptos unwind, let's be kind, okay? They went down very sharply. Then the stock market, right behind it, okay? Next is gonna be the bond market, and that's already happening. And after the bond market, we got real estate, and that is already starting. This is all starting to play out real fast. Now, one of the reasons why it's playing out really fast is a lot of this stuff is computerized. When you see a lot of selling in the market in a very short period of time, most of that is computer generated. Okay, the algorithm says, all right, that support level is taken out, then sell, all right? And the other part of the equation is anyone who has anything on margin, they get to a point where the computer starts selling their positions, not because they want to sell them, but because they have to sell them, because they're getting margin calls. In the old days, when the stockbroker, there was that gentleman thing where we call the person and give them a chance to put money in their account to raise their cash. Not anymore. Now the computers just sell. So if you are leveraged right now and you're on the wrong side of the market, just a little friendly, just friend to friend here, okay, go for a long walk and think it through, man, because you are really exposed. This market can get a lot worse, and I think it's going to get, a lot worse. Now, if you're a trader, you can make money in the down market. That's what a lot of people are doing. And if you're a follower of my channel, you can see some of the important support levels. Now, again, that's not what my channel is going to be about all the time, because I focus on other things. So what can you be doing right now in the face of the big market sell-off, including real estate, and the upcoming disaster that's coming in our economy? I mean, we're in a recession. Don't let anyone tell you we're heading, we might go, no, we are in a recession now. The only question is, are we going to go into a depression? And for those of you who think that can't happen, it can happen. Again, I won't bore you with information about a lot of countries out there that are well into hyperinflation and just experience awful pain. And there's no reason why it can't happen to us. Matter of fact, it's a very good chance it is going to happen to us, including food insecurity. Okay, I got to be careful not to go down too many rabbit holes for you guys. But so what should you be doing right now? Well, my 3-step plan, that I suggest to people, again, not financial advice, and not your financial advisor, do what you want, of course. But these are ideas, right? First thing you want to do is you want to reduce your exposure to your bank, the traditional financial system, okay? Because when banks start to go under, and it could happen, remember, for those of you who are old enough to remember 2008, 2009, not that long ago, the exact same thing could happen and worse, okay? So get at least some money out of the bank, all right? Then you have the fear of the bail-in laws. Make sure you watch my video on the bail-in laws. Go back, do a search on my channel, and watch that video. Bail-in laws are very dangerous. They can legally take your money. Any money you have sitting in the bank is not considered your money. Legally, it's not your money. The bank can literally steal it. And in the next crisis, that's what's going to happen. So get at least a large chunk of your money out of the bank. Reduce your exposure to the bank. Number 2, okay, once you get that money out of the bank, it's still a depreciating asset, because with inflation, the value of your fiat currencies are going down. Okay, your buying power is going down. So put some of that into gold. Literally go to your local coin dealer and start buying some gold. Pay for it in cash. Don't use a credit card. Don't use a check. Okay, pay for it in cash. You don't want there to be a record. Okay, that you own it. Okay, different topic. So get some of it in gold. Now, gold, I think, could have its day in the sun when all this starts to unwind in a really big way. But that's not the main reason for owning gold and silver. The main reason is to maintain the buying power of your money. Okay, remember, fiat currencies is not real money. It's fake. It's made up money. The only real money in the entire world is gold and silver. So put some of it in gold and silver. You got to keep some cash on hand, because we still live in a transactional world using, dollars. So or your fiat currency. So you do want to do that. The third thing you want to do is establish some form of passive recurring income. And on my channel, I give you guys lots of ideas on things you can do to create a passive recurring income. And again, I'm going to be doing more videos on how to generate passive recurring income. So again, if you're not a subscriber, please subscribe so that when I get these ideas, I can share them with you. And no, you don't have to do anything that I'm doing, right? I will just share with you what I'm doing, and you can decide what makes sense to you. But establishing forms of passive recurring income will make you bulletproof in a recessionary period, even a depressionary period, right? So you want to develop forms of passive recurring income, okay? Please, if you haven't subscribed, please subscribe to my channel, and please give this video a like. Ed Anderson signing out.
Copy that.